We think this could be one of those most meaningful economic productivity delivering innovations of all time. We think that the GDP contribution from autonomous ride-hail systems could total around 26 trillion by 2030.
In this video, ARK invest on Tesla's $26 trillion opportunity and quick look at the latest FSD beta release, which ties in very closely to the subject of today's video. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. First, let's start with the release notes of Tesla's latest FSD beta build, version 10.12. This will provide some extremely important context for the rest of the video. As we read through this, remember, what Tesla is developing here is a form of intelligence. They have a vision-based system, just like we do, eyes versus cameras, attached to a neural network, just like we do, biological neural network versus a artificial neural network, effectively the same shit. Words like prediction, planning, perception, and so on, these are all hints about increasingly intelligent autonomous software. Okay, upgraded decision making. We've already seen form of intelligence, the first three words here. Upgraded decision making framework for unprotected left turns with better modeling of objects' response to ego's actions. For those who don't know, ego being the vehicle, as in the Tesla. We're not going to go to this level of detail in every single one of these release notes, but first sentence here, let's understand what's happening. Tesla's software has improved its capabilities of making decisions by better modeling what other objects on the road, modeling as in predicting what other objects on the road are likely to do in response to the driver of the Tesla vehicle's actions. Let's skip ahead a little bit. This framework also leverages median safe regions when necessary to maneuver across large turns and accelerating harder through maneuvers when required to safely exit the intersection. If you need to punch it to get through this safely, then do it. This is becoming more and more human-like with every update. Improved creeping for visibility using more accurate lane geometry and higher resolution occlusion detection. Reduced instances of attempting uncomfortable turns, kind of stuff that causes the people in the vehicles to white knuckle it, through better integration with object future predictions during lane selection. Again, we're talking about predictions here, intelligence. Keep reminding yourself, what are we hearing? What's the terminology? Is that another reference to increasing intelligence and capabilities? Yes. Increased safety of turns with crossing traffic by improving the architecture of the lane's neural network, which greatly boosted recall, as in memory. Wait, what was that thing? And geometric accuracy of crossing lanes. Improve the recall, again, memory, recollection, and geometric accuracy of all lane predictions by adding 180,000 video clips to the training set. Question, of all the other companies attempting to solve autonomy, how many of them do you think had a data set of 180,000 video clips that they could add to the training and suddenly get a better result? Spoiler alert, none of them. This actually really matters. Improve geometric accuracy and understanding, one more time, understanding, another reference to intelligence, of visibility by retraining the generalized static obstacle network with improved data from the auto labeler and by adding 30,000 more video clips. Again, the prior point, who else can just pull 30,000 video clips out of their ass to retrain their nobody, that's the point. Improved recall, once again, I'm sure you guys are sick of hearing it, but again, too long didn't read the entire release notes. Got more intelligent, fed it more data, got more intelligent, fed it more data, got more intelligent. Improved recall of motorcycles, reduced velocity error of close-by pedestrians and bicyclists, and reduced heading error of pedestrians by adding new sim and auto-labeled data to the training set. Improved the prediction of is parked. Now, for those of you that don't know, Tesla software the entire time, just like humans, even though we're doing it subconsciously, scanning the road. Wait, is that vehicle driving or is it parked? Okay, should I ignore? Okay, cool. It's important to understand that. So, improve the precision, as in became more intelligent at predicting whether a vehicle is parked or isn't by adding 41,000 clips. I know we're hearing the same shit, but it's really important to understand this. Again, Tesla's like, how can we make this better? Well, I know, how about we dump 40,000 training clips in here and next minute it's better? And this is incredible. By doing so, Tesla solved 48% of failure cases captured by their telemetry. Okay, so in other words, in 48% of cases where Tesla's previous FSD beta version was failing to accurately predict whether a vehicle was parked or not, just by this minor improvement, 41,000 new video clips, retraining, it's making half as many mistakes. This is stunning. Improved detection recall, again, memory of faraway crossing objects by blah blah, you guys get the point, right? Improved offsetting behavior when maneuvering around cars with open doors. Improved comfort when lane changing behind vehicles with harsh deceleration by tighter integration between lead lead vehicle, future motion estimate, again, more intelligence, predicting what other things are going to do, and plan lane change profile, as in the software is becoming more accurate at predicting what the lead vehicle is going to do. Where's it going? What lane will it be in? Is it going to slow down, accelerate, move? Increase reliance on network predicted acceleration for all moving objects. Again, I know I'm repeating myself, but it's so important, it matters. Prediction, intelligence. Updated nearby vehicle assets with visualization indicating when a vehicle door has opened. Very important. Don't know why it took so long for this, to be honest. But anyway, better late than never. And improved system frame rate by almost 2 frames per second by removing 3 legacy neural networks. In other words, Tesla's new networks now more capable than their legacy networks. Throw them in the bin, move on. Here's an example of what the visualization of a car door open looks like. We can also see here a lot more variation in the style and models of vehicles being shown here. And now, with that very important context out of the way, let's turn to Tasha Keeney of ARK Invest discussing Tesla's 26 trillion with the T $1 trillion opportunity.
Hey everyone, I'm Tasha Keeney. I'm an analyst at ARK. I work with Sam on our autonomous technology and robotics strategy. I cover autonomous technology and 3D printing mainly. And today I'm going to talk about 2 different flavors of autonomous technology. So the first big idea is autonomous ride hailing. So, why do we care so much about autonomous ride hail? Well, we think that autonomous cars could be very inexpensive to consumers. And this is what will drive widespread demand. We think autonomous taxis, autonomous ride hail systems could dominate urban transport. And ultimately, we think this could be one of those most meaningful economic productivity delivering innovations of all time.
Oh, is that all?
We think that the GDP contribution from autonomous ride hail systems could total around 26 trillion by 2030.
I'll tell you what, it's a massive shame there aren't any companies today who clearly have an obvious and unassailable lead when it comes to autonomy, or maybe I might buy a tiny bit of their stock. Anyone know any companies like that? Please let me know in the comments below.
For reference, GDP in 2021 is estimated to be at about 89 trillion right now. Numbers are coming out shortly, but that's the estimate. And that 26 trillion includes about 2 trillion of profits that we expect off of these systems. So this is a massive, massive market opportunity. All right, let's get into why.
Hey guys, just wondering, maybe you could help me out in the comments below. Is $2 trillion of profits a lot, like in a single year? Is that just imagine a company maybe had like a 25% share of that. $500 million of profits in a single year just to a single company just based on ride hail. Is that a lot? I don't know. You tell me, please. Let me know in the comments below.
So as I said, we expect autonomous ride hailing to be extremely affordable. At its floor, we expect the price per mile that you could profitably charge a consumer could be about 25 cents per mile. And if you look at the chart here, how does this compare to what we have today and what we've experienced throughout time? Well, the price of point-to-point mobility really hasn't changed since the Model T rolled off the first assembly line. Back in the 1930s, the price to drive a new personal car was about 70 cents per mile. And it's still about 70 cents now. That's changing. With autonomous ride hail, we think thanks to higher utilization rates, that cost could be as low as 25 cents per mile. And to explain that a bit, the utilization rate on a personal car is about 5% of the day or less. A New York City taxi might get a 30% utilization rate. We think that autonomous taxis could get higher utilization rates north of 50%. This is what's driving the cost down. Of course, there'll be a lot of benefits to autonomous cars. We think they'll be a lot safer. They'll be extremely convenient. But what do we think will drive demand? That is this price. And autonomous ride hail should attract, not only people that are in the ride hailing market today, participants in the market today, but also car owners. So, a lot of the new work that we've done this year is around the price per mile that you could charge a consumer. So our first analysis said that could be 25 cents per mile. But now we've taken a closer look, and we actually think there should be many more price segments. And so how we got there is we looked at the value that consumers perceive to be on their time, the perceived value of time that consumers ascribe to the time they spend driving. So we think that consumers value their time at about 60 cents to $1.10 per mile on average. The high end of that is time spent on commuting, work-related travel. The low end of that is time spent on, say, errands or, personal travel. But today, consumers pay about $2 per mile on average for ride hail in Western markets. That's about the average price of an Uber today. So they're already paying up for this additional convenience of ride hail. And notably, this is also much higher than the marginal cost to drive. So the marginal cost to drive is the variable cost of driving. It's basically what you think about when you drive, the cost of gas, insurance, all the costs that you pay, in a day-to-day or on an annual basis, as opposed to the fixed costs, which are also included in our 70 cents per mile estimate. So the marginal cost is about 34 cents per mile. So consumers are paying much more than that for ride hail today. And importantly, if you go back to that 25 cents per mile estimate that we have for, as cheap as can be autonomous driving, that's going to be lower than even just the marginal cost drive at 34 cents.
Now, this is an extremely important point to understand. When we're talking about marginal cost here, this is the additional cost after you've already purchased your vehicle, just the cost to own, operate, and maintain a vehicle. Ride hail in the future, according to ARK's estimates, will be cheaper than the cost for somebody who already has a vehicle to continue using the vehicle they've already paid for to get themselves from point A to point B. This is a point where economically, financially, a lot of people ask themselves a question, hang on a minute, why in the f*** would I buy a car for a few tens of thousands of dollars, use it 5% of the time at best, and have it sitting in a garage collecting dust the rest of the time? Never mind the complete and utter waste of having to buy or rent land at my home for a garage for the vehicle I hardly ever use. Why wouldn't I just hail these much safer, economical vehicles on demand?
So autonomous ride hail is going to be attractive to, people of all kinds. I think it's going to bring a lot more people into the ride hail market than we have there today. And, when we segment the market, we've used the analysis that I just mentioned. So you can imagine that there's going to be a swath of demand worth, if you look at this chart, worth at around, $134 billion. That's using price points from what we see in today's ride hailing options, that $2 to $4 per mile. And this is mainly in Western markets. Then at about $990 billion of opportunity, that will be for Western markets supplanting commuting miles. So this is at the higher end of that value of time analysis that we did. And then another $2.4 trillion of opportunity for non-commuting miles. So this is, again, Western markets, the value that people place on their personal driving miles. And then there should be about, moving away from Western markets to places like China, where ride hail is already extremely cheap. That's another $2.75 trillion worth of opportunity. So that's coming in at around 50 cents per mile, a little bit lower. And then finally, this super long tail that you see here in the graph, an additional $5 trillion of opportunity at that low cost of 25 cents per mile for autonomous taxis.
So just to make sure everyone's following along at home here, what we're seeing, the graph here is showing how many miles of demand are there at each price point. So the lower the price point, the more demand. Makes sense. And when ARK talk about the long tail there, if ride hail can get to around 25 cents per mile, and yes, it will be profitable at those levels, the demand here is absolutely absurd.
Sam mentioned in this presentation that there could be neighborhood electric vehicles. You could picture this being a purpose-built autonomous taxi. And this is a segment of the market where you bring many more people in that aren't participating in ride hail today because they're all of a sudden getting access to really cheap point-to-point travel. So all in all, this sums up to about an $11 trillion addressable market. And I'll note that that's the addressable market and I'll get into later, what we expect the market to actually be in the next 10 years or so. And one thing I'd like to note, because it's pretty topical, if you think about our 25 cents per mile estimate that brings in a lot of other people into the ride hail space, we actually think that autonomous taxis will also increase traffic globally. You can see here in the graph that in the next 10 years, traffic could more than double. This is because, of course, we expect autonomous ride hailing to be cheap and convenient. People might take it more often. But again, more importantly, it could expand the customer base, and this could add to miles traveled.
So ARK Invest reasonably believe that as demand increases because prices come down, traffic's going to increase as well. Does anybody know any people out there that are trying to solve the traffic problem before it gets even worse than it currently is? Nah, neither do I. Someone should start a tunnel boring company or something. That'd be probably a good idea.
But lucky us, we have, we're seeing the early innings of air taxis. So these are autonomous electric machines that fly. They can transport individuals or a couple people at once on short trips. So this is some analysis that Sam has done. And when air taxis commercialize, regulatory requirements permitting, they could cost roughly the price of what a taxi would cost you from Manhattan to JFK today. So an airport cab. But you'll get to the airport in about 18 minutes. Of course, this is much cheaper than today's helicopters. And the trade-off at the time, you can imagine, will be either you take an air taxi or you take an autonomous taxi. The autonomous taxi, which you can see here in green, is going to be a lot cheaper, maybe just $10 for the whole trip, but it's going to take you longer, again, because traffic will be worse. So that's really the trade-off that you'll be making between the two. And then finally, I'll point out here on the graph, you see subways. We think that mass transit will likely still stay as one of the cheapest options out there. And when we look at the enterprise value that we expect off of these systems, we think the lion's share of the economics should accrue to the autonomous platform providers. These are the companies that actually own the technology stack, the companies building the technology that makes the car drive itself.
So again, I just wanted to ask the question because I can't think of any off the top of my head. Anyone know any companies today that are actually building the technology, autonomous vehicles? They're actually creating the software, No? Oh, okay. That's a shame. I'd really love to buy their stock.
So that alone, by 2026, we think could be an $11.7 trillion bucket of public enterprise value ascribed to these systems. And if you think about the ride-hail space today, and the automakers and car rental, everyone in the car ecosystem today, we don't necessarily think that those players will be the ones to be around in the future.
Did Tasha Keeney just suggest that legacy automotive manufacturers are all going bankrupt, and so too today's ride-hail companies, Uber and Lyft, and also today's car rental companies? Nah, she definitely didn't suggest that.
Starting with ride-hailing companies, their assets, their drivers are going away. Unless they partner with successful autonomous technology providers, they may not be around in the next 10 years.
By the way, special shout out to Hertz, who just a few months ago, after purchasing literally 100,000 Tesla Model 3s at market price, may have low-key made one of the most savvy business moves of all time. While companies like Uber and Lyft are likely to go bankrupt with the advent of autonomous ride-hail, Hertz, who are currently renting vehicles to customers, have a fleet of over 100,000 Tesla vehicles, meaning that when autonomy is solved, Hertz can pivot their entire business from car rental to autonomous robotaxis. Yep, that's right. I think Uber, Lyft, and other ride-hail companies today are in for some serious butt hurts.
And then if they do partner with autonomous technology providers, the take rate that they get off their systems might be much lower than it is today because, the company that makes the car drive itself, that lowers costs, those companies will have the most leverage here in the system. Automakers. So as of November last year, the enterprise value of all automakers was about $4 trillion. And remember that that's mostly gas-powered car manufacturers, right? EVs are in the single-digit percentage points of all cars produced every year. And in the future, we think that the autonomous electric auto manufacturer space, so this will consolidate. Not every automaker will survive the transition to electric technology, let alone autonomous technology.
Tasha didn't just say that legacy auto are all going bankrupt again, did she?
But those that do could enjoy a $1.6 trillion opportunity in the autonomous electric future. And again, that'll be a much more consolidated space. I'll also point out that you could take the purple bar here on the graph on the right and the green bar and add them on top of each other. That's about a $13 trillion that we can assign to the enterprise value for fully integrated companies. So companies that are fully verticalized, like Tesla, that are producing both the technology stack and the hardware, the car that goes with it, could sit in a market worth about $13 trillion in enterprise value.
Just for fun, let's do some real quick math. Assuming that ARK are right, and in 2026, by the way, in case you've lost track, it's 2022 already. In 2026, we're looking at $13 trillion in enterprise value. Hypothetically speaking, let's just say that a company, I can't think of any that might be in this position, but just imagine that there was a company out there that maybe gets about a 1/4 slice of this opportunity. That would be about $3.5 trillion. Let's say if today that company was worth around $700 billion, not that I can think of an example, but if there was a company like that, that would mean about a 5x in value just based on autonomy and ride-hail in the next 4 years. damn, I wish I could find a company like that. I'd definitely like to invest in their stock.
Lastly, fleet owners. That's about $300 billion worth of enterprise value by 2026. These are companies that could be, car rental companies that want to survive this transition, companies that house and maintain the vehicles. They serve as an important part of the ecosystem, but the share of economics will be a bit smaller than the other two categories. So all in all, we expect that autonomous ride hail could add about $26 trillion to global GDP by 2030. And it could be the most meaningful impact of any innovation in history.
So let's continue with these hypothetical scenarios. Just imagine that there was a company that was pioneering, leading, in fact, maybe even had an unassailable lead in the most meaningful and impactful innovation of all time. If such a company existed, is it possible that they may, as a result, become the most valuable company of all time? I think the answer to that would be yes. Just massive shame I can't think of a company like that. Of course, ARK Invest could be totally wrong. Definitely a possibility, but if they're not, definitely something to think about.
So first, how do we get there? Well, you can see here in the graph on the left, we're looking at these various buckets of total losses and total gains that we expect for that 2030 GDP number. So on the losses side, okay, almost $2 trillion of personal car sales. So you can imagine that as autonomous electric vehicles are available for ride hail, that people will start to forego car purchases. You may stop using your personal car, and then eventually the next time you come up to purchase one, you won't.
I think this is a reasonable hypothesis, speaking as a guy who hasn't owned a car for over 4 years, because I don't need one, because I just hail on demand, because it's more convenient. Plus, I don't want to pay $1 million for a car space here in Sydney.
And these will be gas-powered cars mainly, right, that will no longer be purchased. So along with that, there's about $660 billion worth of fuel revenue that could go away. And then maintenance, electric vehicles require much less maintenance than a gas-powered car. We expect all autonomous vehicles to be electric. They're extremely cheap on an operating basis, but also we've heard that they offer better technology integration as well, opportunities there. And then lastly, on the losses side, medical revenue, property repair revenue, and these are buckets that we're assigning to the revenues that are spent on car accidents. So every year, globally, over 1 million people die per year in car accidents. And in fact, today alone, over 3,000 people will likely die.
Rather horrifying to think about, isn't it? Strange that we're not locking people inside their own homes and preventing them from getting out on roads and injuring and hurting and or killing themselves and others. I mean, if we're being fair and equal about things, wouldn't that be the logical thing to do? Just ban people from using their vehicles because they're so dangerous and so many people are dying. Never mind the 10 times higher number of people who are being permanently injured or disabled. So let's say 3,000 people dead today and another 30,000 permanently injured or disabled. Let's not go down that rabbit hole of inconsistency. Point is, autonomous vehicles over the long term will ultimately save many tens of millions of lives and hundreds of millions of people from being permanently injured or disabled. This will have an enormous positive economic impact. Of course, the thing that matters more than the economic impact is the lack of suffering.
So while we see these revenue streams going away, of course, overall, this is I think a net benefit to society. And then actually one more bucket is insurance. We expect autonomous cars will be 80% less likely to get in an accident than human-driven cars today. So insurance will likely be cheaper on these vehicles.
This is an extremely important point. I think a lot of Tesla investors in their own valuation models are overlooking this. I'm personally expecting that Tesla insurance in my base case will be as low as about $25 to $28 per month over the longer term. By the way, this still accounts for an absolute ton of revenue. At some point in the future, Tesla's fleet of vehicles will be over 100 million. $25 a month on a fleet that size will be around $30 billion in revenue.
Moving to gains, the total gains are about 30 trillion. This includes 16 trillion productivity uplift. Brett, in the beginning of Big Ideas today, mentioned that we think autonomous technology could allow for this unlock where you turn previously unaccounted for economic activity, driving your car, into economic activity. So maybe you'll be reading work emails, doing work, or if you're Brett, maybe you're binge watching Netflix in the backseat of this vehicle. $10 trillion in service revenue. This is the revenues that we expect off of the taxi platform itself. An economic gain for the preservation of life. Again, we're preventing over 1 million people of dying in auto accidents every year, and they go on to be productive members of society. And then about $1 trillion of incremental autonomous car sales. So if you look at the graph on the right, all in all, going back to the 1850s, looking at the steam engine, Robots in the 1990s to the early 2000s, and IT from a similar time period as robots, those all contributed less than 1%. Those were all very extremely meaningful. But their impact on annual GDP was less than 1%. We think that the impact from robotaxis could be 2 to 3 percentage points on annual GDP by 2030. So again, this is one of the most meaningful innovations that we will see in our lifetime.
So I think what Tasha Keeney was saying here is that you should ignore the autonomous ride-hail opportunity and definitely not try to identify any companies who have a compelling strategy, maybe the only strategy, who have an unassailable lead, who have untouchable scale, and who are making the most progress in this direction, because the opportunity is not even worth pursuing. It's a complete waste of time to look for any companies whose stock you might be able to buy to take advantage of this gigantic opportunity, the most meaningful impact in our lifetimes, and you obviously just wasted half an hour of your life, so sucked in. Anyway, I hope you guys and girls have enjoyed this waste of a time video. Clearly ARK Investor are insane and their research doesn't make any sense. There's no opportunity here, and that's the end of that. And lastly, don't forget you can join Patreon with the card in the corner or the link at the pinned comment. You'll instantly gain access to my Tesla stock price targets out over the next 10 years. And yes, it does include an enormous component of ride hail and robotaxi, although that's much later in the decade. Plus, you'll gain access to over 100 exclusive Q&A videos, dozens of other exclusive pieces of content, loads of perks, and plenty more. So, we'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.